Hey everyone, welcome back to Corporate Decoder. Ever wonder what a company really means when they say we're focused on long-term growth? Well, today we're cracking open TriplePoint Private Venture Credit's latest quarterly report, a company that lends money to startups to find out if their version of long-term lines up with reality. Let's see if this report sings a sweet song or strikes a sour note. If you want to share your findings and what you look for in quarterly reports, join our community in the Discord channel linked in the description below. This is TriplePoint Private Venture Credit's financial report for the first 3 months of 2025. First, let's quickly dive into the numbers. They list their investments at what's called fair value, which is about $346.8 million, though actual cost was higher at $369.5 million of the money. That means they estimate that the current value of the money they lent is less than how much money was actually lent out. Let's keep an eye on that. Next, we have interest income from investments. It's at $11 million, but last year it was $15 million. That is quite a drop. This comes with a note. Payment in kind interest income, which is where the company pays its debt in additional shares instead of money, and that number has stayed relatively stable. Okay, so let's look at the earnings per share, which tells us how much money each share of stock is making. So here is the net investment income per common share, and it's 22 cents compared to 41 cents last year. That's quite a bit less, 16 cents last year. So we can see that the company's profitability is down. They have about $72 million in cash, which seems pretty good. But if we compare it to last year, which was $55.3 million, the numbers are actually higher. So they have about $2 million more compared to the previous year. This is despite what the balance sheet seems to say. Now let's scroll down to the real meat of the report, which is the details on their investments. This schedule is massive and we have no time to go over every single line, but you can see how they invest with this view of their portfolio broken down by company, industry and investment size. Time for the fine print. The company says they are using estimated numbers for a lot of things, like how much their investments are worth. They have to use their best judgment to do that. There are different levels of reliability for how a company comes up with these fair values. Their investments are level 3, meaning the fair value is hard to observe and requires significant judgment. There's also a lot about end-of-term payments and various agreements. All these legal and accounting sentences mean that they get a slice of the profits when a company does well, or they get compensated differently at the end of the contract if things go according to plan. Again, let's keep an eye on that cat. You can also see an investment is particularly troublesome if you see the number decreasing every quarter. This can be seen in Rally Network's table row, which we can't show using scroll tag. The company also utilizes foreign currency forward contracts to mitigate against exchange rates. This means they are dealing with international companies. One last thing to note is that this report says the company is a non-accelerated filler and also an emerging growth company. Both of these basically mean this report is less useful to finding information about it, because a company with this designation requires less information disclosure. Now let's take a quick peek at the risks they are facing. You'll want to take a look at these if you are thinking of investing in the company yourself. Finally, during this quarter, there weren't any odd trading plans by the company directors. This often means that no one expects anything very dramatic to happen, so no one is trying to jump in or out early. Interestingly enough, a bit after the quarter ended on May 15, they announced a distribution, the equivalent of a dividend of 35 cents per share to stockholders. Now let's step back and talk big picture. TriplePoint lends money to startups, so what can we see from this report? It looks like things are actually a bit tough right now for them. Investment income is down, and those vulture equity warrants may not be worth all that much. Also, many of the investments that they have at an agreed upon high interest rate actually are not making money for them. And they had to write off investments into the trash can because there were heavy realized losses, because it's also important to note what they didn't disclose. There wasn't anything significant mentioned in the legal or risk sections. Also, there were no insider sales. These are good signs that mean that they are confident in the company in future, actually are not making money for them. And they had to write off investments into the trash can because there were heavy realized losses. It's also important to note what they didn't disclose. There wasn't anything significant mentioned in the legal or risk sections. Also, there were no insider sales. These are good signs that mean that they are confident in the company's future. I have to say there were also some pretty heavy swings in the preferred stock valuation of a few things that they had, where its value was down 50% in a quarter and then back up. This shows it is hard to price venture-backed companies since their valuation is more of an art. Is TriplePoint Private Venture Credit a screaming buy or a stock to avoid? I'd be cautious. There are too many question marks about their lending portfolio. but I'm no financial advisor. These are just my takes. I recommend keeping a close eye on their filings and on what sort of companies they give money to before making any moves. Alright, that's our breakdown of TriplePoint's latest filing. What do you think of their lending portfolio and future plans? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Also, don't forget to check out the Discord in the description. Thanks for watching. See you next time.